Hello, this is Dilantha from Beat Billions, and we are looking at Facebook today. So, Facebook stock has declined by about 10% over the last five trading sessions as a result of the decision by many large companies in the United States to boycott Facebook and some other social media companies such as Twitter, based on the inability of these social media companies to curb hate speech in their advertisements and rather on their platforms as well. So we at Beat Billions believe that this market reaction is actually an overreaction, and we continue to believe that Facebook is still undervalued. So let's look at a few numbers. So in case you're not sure of which companies have already decided to boycott Facebook, you can go to this link, and I have included this link in the description to this video as well, so you can see a list of all the companies who have already decided to boycott Facebook. So if you really look at the numbers, we already knew that advertising budgets of many companies in the United States were already going to be cut as a result of the massive dip in consumer discretionary spending that has resulted from this virus induced recession. So in all the previous recessions, the advertising industry shrank. So right now, like, the present situation makes it very convenient for all these companies to boycott Facebook, but the real question is, how long can these companies continue to do this? So if you really take a look at it, the economy of the United States is expected to recover by the first half of the next year, and by that time, consumer discretionary spending can once again be expected to grow, can once again be expected to move higher. So, if they are still going to boycott Facebook, then on what other social media platform are these companies going to market their products and services? So, it really does not make sense. Like, the long-term impact of this movement is likely going to be zero. So we believe this overreaction of the market presents a very good opportunity for you to grab some Facebook shares at a discount. And there's another question as well. So the global advertising industry actually shrank more than the global nominal GDP growth in during the global financial crisis, and a similar phenomenon can be expected this time around as well. But on the bright side, as you can see right here, the global advertising industry grew faster, picked up faster than the global nominal GDP growth since the fallout of the financial crisis in the recovery phase, that is. So the recovery phase from this virus-induced recession is going to begin by the end of this year, or at least by the beginning of the next year. So that would really bring the advertising dollars back on the table, and Facebook would still be the go-to solution, the go-to platform for all these marketeers to market their products and services. And on the other hand, like, we believe all the regulation, all the policies changes that Facebook is coming up with currently to make their platforms a better place for a better place for users to access timely news information. So all these regulatory changes, all these policy changes rather, would be a hit on the operating profit margin of the company in the short run. But in the long run, we believe this will ensure Facebook becoming a more trustworthy platform, and that would be really good for the company as well. So, taking all this into consideration, we have assigned a target price of $303 per Facebook share, and that actually is an upgrade from our previous target price of around $276 a share. So the expected monetization of WhatsApp had a lot to do with this thing, and needless to say, we have incorporated the expected hit to Facebook earnings resulting from this boycott movement as well. So Facebook is still trading at a steep discount to its intrinsic value as far as we see. So we hope you enjoyed the video, and make sure to subscribe us to stay tuned with what is happening in US markets. Thank you.